Hey everyone, welcome back to Corporate Decoder, the place where we decode those Wall Street filings to give you the real story. Today we're digging into Oxford Square Capital Corp's latest report. Get ready because it looks like they're making some big moves with their debt. Alright, let's get straight into what Oxford Square Capital Corp told us on August 2025. This report is like a public announcement, and this one's all about something called other events. Scroll Oxford Square Capital Corp's exact name of registrant as specified in its charter. Scroll you scroll the company Oxford Square Capital Corp is letting everyone know about a specific financial action they're taking. Scroll Mefriland 81400638 Tafel 200636 scroll D. Just a quick look at their official details here. They're incorporated in Maryland and have been around for a bit with a standard setup for a public company. Scroll 8 Sound Shore Drive Seb, Suite 255 Culver, and here's their main address at 8 Sound Shore Drive in Greenwich, Connecticut. Nothing too exciting there, but it's their home base. Scroll Common Stock, par value $0.000XESU Global Select Market L Scroll, sell, and now let's talk about what they actually do. They have common stock, famously known by the ticker symbol OXESQ, trading on the NASDAQ. This means regular folks like you and me can buy a piece of the company. Scroll 625% notes due 2026, Accredute X, UZ 2Z WANEKEO, Global Select Market LL Scroll. But what's really catching our eye today are these notes. Think of these as loans the company has taken out. They've got these 6.25% notes due in 2026, trading under the symbol OXSQZ. This is where the main news is. So on August 20, 2025, Oxford Square Capital Corp sent a message to US Bank, which is essentially the bank handling the loans. They told the bank that they're planning to pay back some of these notes early. What does redeem mean? It means they're buying back their own debt. They're specifically calling back a huge chunk of these 6.25% notes due 2026 to the tune of over $24 million. That's a serious amount of money. They've told the bank to let all the people who own these notes know that they're going to be repaid. This is standard procedure. When a company wants to pay back debt early, they have to tell the lenders. The big day for this repayment is September 19, 2025. They plan to pay back the entire $24 million amount of these notes. This means that these specific loans are going away. And when they pay back all the notes, those specific notes will no longer be traded on the NASDAQ. They'll be gone from the stock market. Here's how they're paying it back. For every note, they'll pay $25 plus any interest that's built up but hasn't been paid yet from the end of July up to that September repayment date. So lenders will get their principal back plus whatever interest is owed. If you're holding these notes, this is the address where you need to send them to get your money back. It's US Bank in St. Paul, Minnesota. It's important for anyone invested in these specific notes to pay attention to this. One last little legal bit here. This public filing itself isn't the official notice. The bank will send out the official notice to all the lenders. Now, like most of these reports, they include a section about forward-looking statements. This is basically a disclaimer saying that while they're talking about future plans, things could change. They are saying that anything in this report that isn't about something that already happened is a forward-looking statement. These aren't promises about the future. They involve risks and uncertainties, meaning what they expect to happen might not actually happen. The actual results could be very different from what they're saying they expect because of various factors. These factors are usually detailed in other filings they make with the SEC, and they're not promising to update you if these future expectations change, so you kind of have to keep an eye on them yourself. They're also telling you not to put too much faith in these future-looking bits because they're only relevant as of the date the report was made. They show you the kind of words they use to signal these future-looking statements, words like anticipates, ets, plans, and so on. It's a way for them to talk about the future without making a firm commitment. Basically, these statements are based on the information they have right now, but there are a lot of unknowns that could make things turn out differently than they imagine. And finally, the report is signed off by Saul B. Rosenthal, who is the president of Oxford Square Capital Corp. This means the company officially acknowledges and stands by the information in this report. Here's the big picture I'm getting here from Oxford Square Capital. They're paying off a pretty significant chunk of their debt early. This isn't always a bad thing. Sometimes companies do this if they have extra cash on hand and can save money on interest payments over time. It can be a sign of financial health or a strategic move to clean up their balance sheet. On the flip side, paying off debt early can also mean they're not seeing enough good investment opportunities to justify holding on to that cash, or they anticipate interest rates going down and want to lock in their current debt structure. Or perhaps they need to reduce their debt burden to meet certain loan covenants or to improve their credit rating. The fact that they're doing this with their 6.25% notes due in 2026 suggests they're prioritizing this particular debt. It could be that it's a high interest debt for them, or they just want to remove that obligation before its maturity date. What's interesting is that we don't see a lot of detailed financial tables in this specific filing. And 8K is usually for very specific events like this. The real deep dive into their financials like revenue, profits, and cash flow would typically be found in their quarterly 10Q or annual 10K reports. But for this report, the story is clear. They are taking a proactive step to reduce their debt load on specific notes. The key takeaway for investors is to understand why they are doing this. Is it because they have too much cash and are looking for ways to return it to shareholders, indirectly by reducing financial risk? Or is it a sign of pressure, needing to deleverage to avoid future issues? Without more context from their regular financial reports, it's hard to say for sure. But repaying debt is generally viewed positively as it reduces financial risk. So Oxford Square Capital is making a significant move to pay down its debt. This could signal financial strength or a strategic pivot to simplify their capital structure. It's one piece of the puzzle in understanding their overall financial health. Alright, that's our breakdown of Oxford Square Capital Corp's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.